I think a lot of the appeal to this business for me is helping people reach their goals and get to where they want to be and move into and through retirement comfortably. And to have a roadmap to do that that's really the key. You have a mass balance equation of all your inputs, all of your revenues, your salary, your retirement funds, your pension, whatever it is, and then all of your outputs. You want to see the entire mass balance equation of your financial life. And to do that, you really need to have a solid understanding of your investment portfolio, of course, but your tax situation today and what taxes might look like in 10 or 20 years from now, how you manage your estate planning, design, who your beneficiaries are. There's so much around risk management and risk mitigation as far as what sort of insurance you might need for yourself, for your life, for your disability if you ever can't work for a while. But there's 13 major areas inside those certified wealth strategists certification that we focused on, and it's essentially everything inside someone's financial life. Fiduciary, for me, was one of the most important reasons to leaving the wirehouse culture and coming into a registered investment advisor space, to be in the independent space, where registered investment advisors by law have to be fiduciaries. They have to act in their client's best interest always. It's the highest level of care for your client's financial well-being. And I comported myself in a way at the wirehouse that was aligned with that, but officially I was not a fiduciary. And unfortunately, the culture of a large wirehouse or a regional wirehouse where I was is not necessarily the culture that I wanted. I wanted to be in an organization like Argyle Capital where everyone is a fiduciary and everyone is doing the right thing by their clients always. So it feels better for me. It's more aligned with who I am. And again, for me to act with integrity and to do what I know my clients need before what I need, to be in a firm that enables that and encourages it and actually is required by law, that's where I want to be with my professional life. ESG originally was not ESG. It started out as SRI, socially responsible investing. And back in the early 70s, the very first socially responsible mutual funds were born. And that was essentially just out of the apartheid movement where they were, and this is Pax World Investments, they actually said, we're not going to be invested in any companies in South Africa any longer because of apartheid. So it really was an exclusionary process where they threw companies out of their portfolio because of things they were doing that they didn't believe were right for society or for people. And then they started cutting out tobacco and weapons and pornography and lots of other areas of our society. And it became a socially responsible investment movement, but it was really small for many decades, actually, through the 80s, through the 90s. And then somewhere in the early 2000s, it started to evolve to ESG, or environment, society, and governance, where environment is just really about how you treat the planet. Society is how you take care of people, whether they're your staff or your employees or your supply chain or the people in your community where you do business. Just how you interact with and take care of the people involved with your firm. And then the governance piece is a really important and interesting addition to what was originally socially responsible investing. Because governance looks at the board structure, they look at the leadership, how much oversight the board practices on the operations of the firm, how transparent they are, how well they communicate with their shareholders, if there are women on the board, if there are minorities on the board or in leadership positions. I mean, there's so much around the governance issue. So it went from socially responsible investing to ESG investing. And ESG now has not just an exclusionary component to it where you're knocking out companies that are doing bad things or don't have good governance, but you're integrating it and taking companies into your portfolio that are doing fantastic things. Companies that have proactive operations or proactive products and services that are actually reducing climate change impacts or reducing the carbon footprint of their supply chain or their goods and services. So it's much more than what it was in the beginning in the early 70s. Now it's actually taking companies out, but then bringing companies in. So it's exclusive and inclusive. What I do for my clients is I really want to get a picture or a feel for where their values lie and how they want to build their portfolio. I never will project my values on a client's portfolio and say, hey, I really think you should focus on climate change, because that's my shtick. I let the clients tell me. I put a menu of items in front of them or issues in front of them, and they can tell me, I really want to focus on a safe workplace or no child labor involved in the supply chain of this company, welfare or animal welfare issues or climate change issues. Whatever it is, there's so many areas that a client can focus on. But as long as we have an agreement and they can communicate to me what their values are for their portfolio, then I can start picking individual equities or bond funds or mutual funds or ETFs that really are lined up with my client's values. And from that point, it's really still a matter of asset allocation, getting exposure and diversification in the markets, but it's another layer of analysis that provides enhanced risk management. But the bottom line now to ESG investing is it's looking at non-financial factors in a company's operation, and it's improving bottom lines, and it's just mitigating risk, really. Part of the reason that there's just such an awareness and there's such a demand for values-aligned investing, or people really want to make sure that their portfolio is doing right by the environment and by society, also has to do with partly to do with the fact that Santa Barbara is such a small community and there's so much natural beauty. We're bookended by the mountains and the ocean. There's only so much land there, and there's been a fierce protection of the natural habitat and the beauty that surrounds Santa Barbara. So I think there's a lot of awareness just in the community to both protect the surrounding environment, but also taking from the 1967 oil spill or 68 oil spill and just kind of owning that. I will give you 10 tips inside of one.
Okay.
Read The Elements of Scoring by Raymond Floyd. And all you have to read is Chapter 3. Chapter 3 has the 10 things that every professional golfer does. It's common throughout all pros. And your game will change. I guarantee it. You will become a better golfer. I went from a 12 to a 7 in 6 months' time after reading Raymond Floyd's book. He wasn't the best golfer in the PGA. He was decent, but he had an incredible short game, but he was mentally tough. Mm-hmm. And you get an understanding of what the 10 elements are that are common amongst all the pros. You'll see your score just drop. Royal Dornoch in Scotland.
Oh, in Scotland, wow.
Yeah, Royal Dornoch is a links course right on the coast. Mm-hmm. Second oldest golf course in the world after St. Andrews. Mm-hmm. And the winds are just ripping off the ocean, and your ball will start at the green and it'll end up 50 yards to the right. It's just...
My ball does that with no wind.
It's treacherous, yeah.